recording and recording. Here we go. So, hello everyone. My name is Marie Hillin. I'm a realtor with Global Banker Beverly Hills, and welcome today to our webinar, Mortgage Market in COVID-19. And we have our special guest in our house, loan and mortgage expert, Manny Morales, with Guaranteed Rate. Thank you, Manny, so much for being here.
Thank you, Maria. Thank you for inviting me, and I really appreciate it.
Yes, of course. And first and foremost, I hope everyone is staying home and staying safe. There's so much uncertainty, not just about our health, about our jobs and business economy, but for everyone who want to know what's happening in home buying process, let's get started. So Manny, how's the market doing now? Are there any people buying, selling, or refinancing?
Yes, there are a lot of people refinancing because the rates are still very low, at historic lows. So you do see a lot of people refinancing right now. All the lenders, the non-bank lenders and banks are super busy with the refinances. You have seen a little bit of the purchase market kind of slow down. That's still happening, but it has slowed down in the sense because you can't go to an open house. You have to do everything virtually, so it's taking a little bit of time for people to get used to it. But that the market is still moving, although probably a little bit slower than where we were maybe 2 months ago.
Yeah, which makes sense, of course. Well, yes, and as you mentioned, the rates have been like historically low and the money being so cheap. A lot of people took actually an advantage and refied their mortgages before the pandemic. And so for someone who didn't do that, do you think it's still a good idea?
Absolutely. If they have the equity in their home to be able to pull the cash out that they need, especially in this time, in this market where you don't know what's going to happen, but if you have the equity to pull some money out that you could put into your bank account as like a savings or a nest egg, it would be a great idea because you have low interest rates. If they can prove their income and they have good credit, it's absolutely a great time to do that now. I think that most people should really think about that. Matter of fact, I had a client of mine that just called me last Friday who I refinanced her home in December and called me to thank me because she wasn't thinking about pulling cash out of her property. She had so much equity and she pulled out $100,000. And now that we're going through all this COVID-19, she said, "Thank you so much, Manny. I'm not worried about money because you helped me and I have the money in the bank." And although she works for the hospital, so she's still working, but she was like, I appreciate you helping me because look, all this has happened and I don't have to worry about money right now. So I think it's a great time for people to do that if they have the equity to do it.
So if people be able to cash out, is the mortgage payment goes up or doesn't stay the same?
Well, it depends. Depends on how long they've had their mortgage. If they've had their mortgage only, let's say 2 to 3 years, and they're pulling cash out, yeah, the payment will probably go up depending on the amount of cash out that they're going to pull. But if somebody's had their mortgage, let's say for 10 years or 15 years, and you're going to pull cash out but put it back to a 30-year mortgage, it may not go up at all. It may be the same or go up very little because you're adding an additional 10 or 15 years. So it just depends on the situation of every borrower.
Yes, definitely. So yes, we had about a month ago, so the Feds, they cut their rates to 0%, which was insane. And the mortgage rates went down also, and people started refinancing. So what's the rates? What are the rates now? Do you have any numbers?
Yeah, so I mean, today I looked at it, and today on a 30-year fix on a conforming 30-year fix, which goes up to 726,000, the rate was at 3.125.
Oh,
On a 15-year fix, today the rate, which was amazing to me, it was at 2.625.
oh, wow.
So, I mean, those rates are really low rates. And, I think that, people need to take advantage of the rates that are out there right now.
Definitely. Do you think they're gonna still go down?
Well, it's hard to say. I think that the rates are going to stay low. How much further they're going to go down, I don't know. Right now in this market, this market is very perplexed in the sense that you have days where it goes up and then days where it comes down. So it's been very volatile. Although the rate where it's at now, 3.125 today, just today on a 30-year fix, that is really low.
Yeah.
So I always tell my clients, if you're going to refinance and the payment works for you now and it's going to save you money, or going to pull the cash out that you're looking for and you can afford to make the payment, then I think you should take advantage of where it's at today, because we don't know what tomorrow's going to bring. Could it go down? Maybe, but we really don't know that. What if it went up? So, it's hard to predict the market right now. I think that where it's at today is low. There's always that possibility it could go a little bit lower, but I think they're going to stay low for a long period of time
Oh,
moving forward.
great. So, and what about the banks? Do banks still making any loans, or they're afraid the borrowers won't be able to make their payments?
Well, the banks are still making loans. All the banks and lenders right now are looking at their situations. Um, they're still making loans, but they are making the criteria a little tougher. So in a sense where you have to have a higher FICO score to be able to get a loan for some banks. You need to prove your income, because there were some loans that were being made out there a month or two ago where you only needed to use bank statements or, just a 1099. Now we're going to go back to, you need to prove your income with your tax returns, your pay stubs. As long as you can do that, you'll still be able to get a loan. They're just making the criteria a little tougher, but they're still doing the loans, and they're doing that right now to protect the bank in this market that we have at this present time.
Which totally makes sense, of course. So, do you are you validating like their employment somehow, or they just like the bank statements would be enough? Or
Well, no, they're still validating their employment, where they're sending out a verification. If they're working, but let's say the human resource department is closed, and they could get somebody from their human resource department who may be working from home, they'll send the email to them over there to fill it out. And one of the other things that they're doing is they are, everybody still gets their paycheck stub. So a week before your loan's actually going to fund, they're going to ask you for another paycheck stub that week to make sure you're still working,
no.
which is a little bit different than what we used to do in the past. But given this market today, where you could be working today and tomorrow you might not be working, so they're doing that as an added layer of protection for the bank and the lenders to make sure that you're still working when they fund the loan.
Yes, and you mentioned that some requirements has changed, and so what kind of programs are available right now? What kind of loans can you get?
Well, there's still the conventional loans that are still available. FHA is still available as well, at a higher FICO, but it's still available. So is the VA loan for veterans. That's still out there. Most of the loans are still available. The only ones that are temporarily on hold are like bank statement loans. Those types of things are on hold right now. They're not doing those. But your regular conventional FHA, VA, all those loans are still happening, as long as the client can qualify with their income.
Oh, gotcha. So it's basically same down payment, same like a little bit. You said the credit score should be a little bit higher. You should verify your employment situation, your income. But basically nothing changed with the big loans, correct?
No, your bigger loans, your jumbo loans, they're still looking for those to put 20% down. That's
Mhm.
typically what you put down on a jumbo loan. But on your FHA loan, you could still put 3.5% down. On conventional loans, you could put 3% down for a purchase. This is for a
Mhm.
purchase transaction. So you still have those down payments that are available. Again, it just would be that they require maybe a slightly higher FICO, and if they can prove their income, loans are still being made even in the environment that we're in.
Oh, that's great. That's great to hear. Um, and what about some kind of like down payment assistance? I know you had the program, I think it called Double Your Down Payment. So are they still available?
Well, the down payment assistance, they're still available. However, they are making those a lot harder right now in the sense that now they're requiring to have a 680 FICO score to be able to get that. And also they're requiring 3 to 4 months reserves.
Oh,
And so it's slightly a little bit more difficult to be able to do the down payment assistance because if you have to think about it. If somebody's doing a down payment assistance program to buy a home, but you have to have 3 to 4 months reserves, they wouldn't be probably borrowing the money if they had reserves in the first place. Um, so it's happening, but again, it's just a protection for the bank or the lender in regarding the down payment assistance.
of course. And I guess it's really good to protect our future market so we will not
Right.
see many foreclosures. That totally makes sense. And on your opinion, how do you think, is it going to be harder to get a mortgage after coronavirus ends?
Is it going to be harder? No, I don't think it's going to be harder. I think that it's still going to be the same. I think we have all learned now, the banks and the lenders, that we could do a lot of this lending virtually. You can have people fill out applications online. You can run credit reports, and I think this is going to make everybody realize that we could still do this. You don't always have to do the face to face.
Mm.
That's still going to happen. People will still want to do that, but I think this is going to open it up to a more of that everybody can know we can do this virtually, almost everything virtually. So I think it's going to be, I think it's going to help in the long run because we had to do it, right? We had no choice because we couldn't see each other face to face. But I think that I think it's going to be better, to be honest with you, knowing that you could see somebody face to face. We could do this video right now with I could do it with a client. It's stuff that we didn't do because it was everybody was leery about it, but now we're
Yeah.
doing it because we're forced to do it, and we're like, hey, we can do this. So I think it's going to help actually, in a strange way, but I think it's going to help.
Yes, and I mean for us, for the agents, we're utilizing like the technology right now just to make the buying and selling process a little bit safer and easier. And like we're doing virtual showings, virtual open houses.
Right.
So it's kind of like new normal right now. A lot of people has to adapt to it. And so what kind of how is your process actually like? Do you have some kind of like digital mortgage process? How does it work right now? How, like, if I want to apply for a loan, is it like how does it work?
Well, right now, what I do is when I talk to the clients, I let them know that obviously we can't see each other face to face.
Mhm.
So, I can send them an email where they can apply online. They have my email has an apply button, and you click the apply button, and they could put in all their information, the application. They could run their credit right there. It could do everything for them. They put all their information. Once they're done putting all their information, their credit is run. It comes to me within a couple of hours, and it comes directly to me. And they can also upload their documents online. So while they're doing it, they can upload their pay stub, their W-2, everything right there in that one process while they're doing it. We also have digital signing. So when it comes to signing, they can sign a good portion of their documents online. They send them their documents online, they digitally sign them. In California, we have some documents that have to be signed in front of a notary,
Mm-hmm.
and we're doing that whereby the notary could go to their home. And if they don't want the notary to go in their house, that's fine. The notary can knock on the door, put their documents on the door, and give them their book. Say, I need you to sign here. Show me your identification, or put it inside the book. Get the identification, and as long as he or she sees them signing while they're at the front of their door, and the notary can be 6 feet away,
Mm-hmm.
that's how we're doing stuff in regards to that, because the notary needs to be able to see them. And those are a few documents that need to be notarized.
Yes, and what about the appraisals? I mean, they had to get inside of the house, and so uh, what are the requirements now?
Well, we're doing now, they're allowing the appraisers to do drive-by appraisals in
Mhm.
certain situations. They're also allowing the appraisers to do desktop appraisals where they just go on their computer, check the values of the property, and come up with a value of the home. Um,
FaceTime.
yeah, now there are still some appraisals that have to be done with a full inspection,
Hmm.
and those are case by case right now. The appraiser could either go to the home and maybe tell the clients, I'm going to go to the home. If you'd like to wait outside, let me go in and I'll take the pictures and come out. Um, but we're adapting. We're adapting by doing drive-bys, um, desktop appraisals, and now we're even getting property inspection waivers on some of the loans as well. I've gotten 2 property inspection waivers on 2 of my clients,
Oh, wow.
where we don't have to do an appraisal at all. So,
Interesting.
yeah, so it's the 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 industry is adapting to this whole COVID-19. That's why I say loans are still being made, and they've adapted, and so they'll continue to adapt while we have this situation where we have the social distancing, and you may not want somebody to come into your home, which is understandable. So we're adapting and making it work. Is it a change? Yes, it's a change, and it takes time for people to adjust to change, but it's happening.
But I mean, it's a game changer for us. And from what are you saying? I think it's literally safer to get a mortgage than just go to the grocery store.
Yes, it is. I would say that is true. Yes.
So let's talk about the economy overall. I mean, the coronavirus pandemic, I think it's triggered a little bit like bad memories of the 2008 financial crisis and also Great Recession. So the stock markets, they're like up and down, they're in pressure, and people being quarantined. Do you think we're on the precipice of seeing another house market meltdown?
Well, that's hard to say. In my opinion, I don't think so. I think that this time around, we have the federal government doing a lot to make sure that that's not happening. They
Yeah,
are putting
they just pumping
billions of dollars,
billions of dollars daily.
and not even billions, trillions of dollars into the market to really try to avoid that situation.
Yeah.
I mean, there's still a lot of things happening, but they are doing whatever they can to try to avoid that. Do we really know? No, that's very difficult to say, but I think that they're doing a lot right now to avoid that. And I don't think that we will go into a recession. I think that we will move forward, and hopefully once this gets done, we'll we're still going to see rates very low,
Mhm.
and we'll continue. Maybe we'll get back to the market that we had a couple of months ago. Now that may take 3 months to happen, but I think eventually, 3 or 4 months from now, I think everything will we'll be able to move forward.
Yes, I totally agree with you. And I mean, the loans they made differently. And right now we have this moratorium on foreclosures. So I think the government being really understanding and like helping not market not to crash. And let's see, I really think that we're gonna be fine. But what about like foreclosures right now? Do you think like losing their jobs, people are still be able to make their payments?
Well, that's something that's hard to say. Will we have more foreclosures? Who knows? Maybe. I don't. That's really, if we do, we won't know for 12 to 24 months if that's happening. Um, that's something that will be down the road. I hope that we don't. I hope that people are able to go back to work and be able to make their payments. And um, but that's everybody's situation is different. So I'm hoping that we don't. And we kind of have to see how the market's going to play out. When are they going to open everything up? When are we all going to go back to work? When is everybody going to? When are restaurants and bars and all that going to go back to work? Hotel industry.
Yeah, I think it all depends how long we're gonna stay in the lockdown and like how.
Right.
Yeah, but as I saw today's news, like they already like starting to say how to get out of like all this like shutdowns, and I heard that Governor Newsom said that he will work with Oregon and Washington just to develop a strategy to reopen their economies, which is a good sign, a positive sign, and
Right.
finally some good news.
Right. Yeah. Like I said, I think we have the feds really trying to do everything they can. And I think the governors of all the states are definitely trying to help and do whatever they can, because this is a situation that nobody expected.
Yeah.
And all you can do now is try to help as much as you can in every situation and move forward, because we've gone down, now we can only go up. And
Yeah.
hopefully we'll be able to go up sooner rather than later.
Yes, perfect. Yes, Manny, I totally agree with you. And thank you so much, Manny, for your time, for your expertise. And guys, if you need a good lender, somebody who is really, really on the top of the game, I will put Manny contact information down below into description. So don't hesitate to reach out to him. I understand it's all like challenging times, and for everyone around the world. Let's just try to stay safe, stay positive, and thank you so much for watching. Take a good care of yourself and your family.
Absolutely.
And, yes, and make sure
so
to like
Maria.
and subscribe down below. Thank you, everybody. Thank you,
Thank
Manny.
you.
Thank you so
I
much for
appreciate
being
it.
here
Thank
with
you
us.
so much. Take care, everyone. Be safe.
Thank you. Bye-bye.
Bye-bye.